Clive McDonnell, Head of Equity Strategy with Standard Chartered, joins us. He joins us live from Singapore. Clive, good morning and thank you for joining us. Are you a bit surprised with what has happened to gold and oil? Normally gold and oil prices, they don't move in a synchronized manner, but the news is that gold is at a 3.5-month high and oil is at a 4-month high.
Yeah, I think it is somewhat surprising given the uncertainty or the difficulty in reading the economic data, both coming out of the US and coming out of China. And I would have expected that a rise in the price of gold, a rise in the price of oil would reflect, with the case of oil, greater optimism about the global economy, but I don't think we have data to support that. And the rise in gold, I think, could reflect a rise in inflation expectations. And again, though, we don't have the data really to support that. So it is a little bit surprising.
How are you positioning yourself on equities at this point in time? I believe at the start of the year you were a bit to risk off on India and China. Is the stance the same?
That continues to be the case. I would say that the uncertainty in terms of the banking sector in China very much remains in place. I think marginally India does look a little bit better. We've seen a big improvement in terms of the current account position. Overall inflation is starting to come off the boil. The deficit was announced for FY14 the other day was a little bit better than market expectations. We're on track for 3% deficit by 2017. So India probably looks marginally better, but an overall environment where investors are negative towards EM, I think a continued tactical underweight towards India, China makes sense at this time.
But if things are improving for India, as you stated, and the macro risks seem to be receding, shouldn't the stance be under review?
I think that while at the margin things are improving in India, but if we look elsewhere in the region, we're seeing more significant improvement, and that's reflected in the performance. A market like Indonesia, which we recently upgraded our recommendation on, raised our index target, you've seen a big improvement in the overall risk profile. Growth has come in much better than expectations. Inflation is going to fall fairly sharply in the coming months. So when we look across the region, the improvement in India, yes, but in other markets we see a much sharper improvement, which has actually led us to raise our recommendation and indeed our index target for the likes of Indonesia.
But do you think Indian equities clearly will differentiate themselves going forward? Because if global economy recovers, it is great news for Indian stock market, because nearly 1/3 of the earnings for Indian companies, they come via export dominated sectors, which is IT and pharma. So global growth indirectly is great news for Indian economy.
Not at all, actually. I mean, when we look at India, of course, for those individual companies in India with exposure to the global recovery, it's good news for them. But at the aggregate level, 30% is quite low. If you look at the likes of Korea, Taiwan, they have much, much higher exposure to the global economy in terms of earnings and indeed weight in the index. So I agree with you that the global economy is looking better, latest data notwithstanding, but it's actually towards North Asia that we'd reallocate to benefit from that.
Okay, what are the themes that you're looking at in India? I believe there was some conviction on IT and pharma names given the whole export theory.
I think our view has evolved somewhat. Certainly, retain a constructive view towards some of the pharmaceutical names, as well as some of the technology. But those have outperformed dramatically over the past 6 months. Rather, we're sort of new information post the telecom auctions. We're becoming incrementally more constructive towards the telco space. We see the outcome for some of the leading players been more positive. So yes, we remain overweight in pharma and technology, but in terms of looking for upside from here, it could be somewhat capped in those sectors, and the likes of telco could benefit from some rotation.
All right, Clive, we leave it at that. Thanks very much for joining us and giving us your perspective on the markets. Really appreciate that.